Hi guys, welcome back to the channel. We are currently talking about my favorite TradingView indicator called TheSignaler. There is a 7-day free trial going on right now, so you don't want to miss it. In previous videos, I have shown you how to trade this on the M15, on gold, on Bitcoin, and today I'm going to be showing you how to trade it on the Nasdaq. This is not financial advice. This is for educational purposes only. Let's jump to the charts. So guys, welcome back. Here we are on the Nasdaq chart. We are using the signaler indicator. So to put that on, all you need to do is go to invite only. You'll see the signaler here, click it on your screen, and this is what you'll get. Now, in previous videos, I have shown you how to set up the indicator, what all the settings mean, but to run through it very briefly, so you can see you've got S trading, you've got S engineering, you've got risk management. This is, if you toggle this on off, then the stop loss entry TP1s will disappear. You can have it as a trailing stop loss. Extra indicators you can put on: EMAs, fair value gaps, also fibs, RSIs, kill zones, support and resistance levels, VWAP, super trend, Bollingers, supply and demand zones, range, and volume profile. Guys, there is so much that you can use on here. I know a lot of people trade smart money concepts, and at the minute my chart is designed for smart money concepts. If, however, you are an ICT trader, then you have all your key levels with the 4-hour daily and the weekly, and you can obviously change it to having fair value gaps drawn on, as I know that you guys like to take that liquidity, break back in, show a fair value gap, which is obviously a shift in direction, and then trade from that. So you have those options if you want this. This is a very versatile indicator. There is so much to choose from, and you can tailor it in your own way. You have to remember that TradingView itself does actually cost quite a bit to have more indicators on your chart. So to only have one indicator, it's going to save you in the long run, to be honest. Our sponsor today is helping people scale their privacy online. Now, if you're trying to automate your business online, then you are going to need a proxy. Proxy for you is the best and by far the most reasonable proxy provider out there in the market today. You get fast, reliable proxies with unlimited bandwidth. Whether you're scraping bots or just browsing, it is perfect for you. Go to Proxy for You today with all the links that you need in the description below. What do you say? Let's get back to the video. So, we're going to jump on the chart, and I'm just going to briefly show you how I have my settings start out. So you've got your higher highs, you've got your lower lows, you've got your higher highs, and it basically just shows the flow of the market. The Boss Plus is the general swing, right? When you're talking about that big long leg, the Boss Plus shows, in this particular instance, we are still very bullish in the swing. So I would be expecting to take more buy trades up, right? And the smaller little ones with the dash lines, that's your sort of micro structure. If you want, that's your normal structure. And then the Boss Plus is your larger swing. So you can see here, you get a chop to the downside and you start moving down, and then you keep coming down, and then you get a break back up, and then you start moving up again to complete that higher high move. You come up, you come down, you come up. It's pretty straightforward market structure, to be honest. And the nice thing about this indicator is it just puts it there for you. So in terms of what I'm looking at right now, our larger leg is bullish. We've had a breakdown on the microstructure, and we are starting to push down. Now, you can take a sell here. I did take a sell here using this indicator. But in terms of distance, I wouldn't particularly expect it to run too far. As I said, the larger leg is bullish. So if you're talking about distances for it to come back, you obviously push up and then you come back down, and we're already 50% down. So I wouldn't be surprised if price started turning from here as you've come into a nice demand area, you've swept the liquidity, and you're starting to show signs of going back up. So I would expect a bullish signal to occur soon, which I would very much take, due to the fact that we've had a nice pullback, the larger leg is bullish, and I would expect to continue that flow until told otherwise. Now, in terms of the trade I took this morning, it was counter trend, okay? And I don't particularly mind taking these, but they do have a limit to how far you can take them, right? For example, if you're bullish in the swing and you take a long, I would expect it to carry further past the swing higher high. Whereas if you're taking a counter trend, I'd be concerned about running it past 50% of the swing leg due to the fact that I would expect price to continue bullish. Nonetheless, I'm going to run through this trade now for you. So as you can see, it's about 6 a.m. my time, so I'm on the charts looking to trade. We get a chock down, which is great, and I would be expecting a signal to come in any minute now due to the fact that we are turning bearish on the microstructure, and I just want to carry it a little bit. So here is your signal. Okay, it gives you a short, it tells you your entry, it tells you your stop loss and your TP 1, 2, 3. Okay, now the stop loss is based on the average true range. Okay, so you can't see it, but just imagine a Bollinger Band that is just showing the true range, and it just tucks the stop loss in behind there. So it's not based off structure or anything, it's just based off, the true range. So when you come in to tuck your stop loss somewhere, hold on 1 second. When you tuck your stop loss somewhere, you just whack it there right where it says to put it with the average true range. And as I said, this being a counter trend trade, I'm only going to run it to TP1 because it's around the 50% area. Arguably, you could work with trailing stop losses. This does work with that, which is fine. You hit TP1, so your stop loss goes to break even, and then you aim for TP2. That's fine. I don't really mess with that. The less management I can do in a trade, the better for my psychology personally. So in this particular one, I'm just going, cool, well, it's 6 a.m. I'm just going to hit a 1-to-1 and be done with my day. I've got golf to go play. So as we play this out, you can see that price comes back a little bit, which isn't a problem. To be honest, we come into a little fair value gap, so I would expect price to drop down from here. As you can see, it does. We start running down and TP1 has been hit. Now this hit at about 8:30. So this was about a 2.5 hour trade. It's not a problem. I'm quite happy with that because you have to understand that a 1-to-1 is still 1% of my account. So I risk 1% to gain 1% in this particular instance. So if I'm trading a 100 grand account, 1% is £1,000. So I would be winning £1,000. So for a Friday, that's pretty damn good. But as I said, the reason I'm taking profit at TP1 is just understanding that overall we are bullish. So this is more of a tongue-in-cheek trade. It's just I'm going to catch it to the 50% line where we then take some liquidity, and I would wholeheartedly expect price to start breaking bullish again to break the highs. Albeit it could come down lower, take the liquidity from this point, and then go from our TP2 area. That's fine. It's just not a risk that I'm personally willing to put on. But if you wanted to, obviously you can drag it down to a TP2 and run a 2R. Now the way that the TP systems work is really simple. It's just 1-to-1, 2-to-1 and 3-to-1. It's no more complicated than that. If you just want to use this indicator as a technical analysis tool, that's fine as well, because in Smart Money Concepts, I know that you guys, you trade to structural points, so if you took out this liquidity here, you broke back in, I would expect price to continue down to these structural points here, which is fine. And you can put your stop loss behind the structure. It's not a problem, right? It's whatever you want. Like I said, this indicator is very versatile. You can really tailor it to how you want it. But that was the Nasdaq trade that I took this morning that bagged me 1% for the end of the week. Now, the links are in the description below, but as I said, there is a 7-day free trial of this indicator. So in terms of wanting to use it, you might as well test it out because, like I said, with your Smart Money Concept or ICT, this indicator does highlight all of those things for you. So test it out for 7 days, and if it suits you perfectly, if you get it into the settings that you like, then by all means get the lifetime bundle. This is a one-time purchase. You'll have this indicator forever after that, right? So $597, it's over half the price right now. It's not going to stay that way forever, and you should make this back in a trade or two. It's not an issue. And like I said, you can just tailor it to your own settings, and then happy days. You won't be having to spend that on your TradingView subscription to have all the indicators you want, right? One indicator for everything. get the 7-day free trial, then get the lifetime, and then just go bank some cash. So as you can see, guys, another great win today. As I said earlier, there is a 7-day free trial going on. All the links you need are in the description below. So go ahead, like, subscribe, hit the bell button so you can be alerted on my next videos.